You have been holding XRP. You have been holding XLM. You have been holding HBAR. And for months, you have watched the price go nowhere while everyone told you institutional adoption was coming. Banks were supposed to jump in. Regulations were supposed to get clearer. The floodgates were supposed to open. They did not. And you are sitting there wondering if you missed something. You did not miss something. Something was missing from the story. And that something is the FDIC, the Federal Deposit Insurance Corporation, the most powerful banking regulator in the United States, the gatekeeper that controls whether American banks can touch crypto at all. And in 2025, they completely rewrote the rules. Most holders have no idea this happened. Most people who buy XRP and XLM and HBAR do not follow Federal Deposit Insurance Corporation policy letters. That is exactly why this video exists, because what the FDIC did in 2025 does not just affect banks, it directly affects the price of every single ISO 20022 coin you are holding, and I am going to prove it to you right now. Let me take you back to March 28, 2025. The FDIC releases Financial Institution Letter 7-2025, FIL 7. This one document changes everything for crypto holders. For 3 years, since 2022, the FDIC required banks to get prior approval before touching any crypto activity. Any bank that wanted to hold Bitcoin for customers, process crypto transactions, or interact with digital assets in any way had to ask the FDIC first and wait for permission. Think about what that meant. Every major American bank, every regional bank, every community bank legally blocked from engaging with crypto without jumping through regulatory hoops. No wonder institutional money was not flowing into XRP and XLM and HBAR. The very institutions that were supposed to buy these coins could not legally do so without bureaucratic approval that took months or years. Then, on March 28, 2025, FDIC Acting Chairman Travis Hill stood up and said, and I am quoting directly, "With today's action, the FDIC is turning the page on the flawed approach of the past 3 years. The prior notification requirement was rescinded, gone, done. Banks no longer need to ask permission. Banks no longer need to wait for approval. FDIC-supervised institutions can now engage in permissible crypto activities under standard risk management, the same way they manage any other banking activity." Let that land for a second. 8,700 FDIC-supervised institutions in the United States, banks, savings associations, credit unions, all of them now legally free to engage with crypto without asking the government first. And for HBAR holders, XRP holders, XLM holders, ISO 20022 coin holders, this matters more than for any other crypto sector, because the ISO 20022 standard is specifically designed for bank-to-bank, institution-to-institution, cross-border payment infrastructure. These coins were built for the exact entities that just got freed from regulatory handcuffs. The pipes are ready, the coins are waiting, and the institutions just got permission to use them. But that was just the beginning, because the FDIC did not stop at FIL 7. In May 2025, the FDIC, the OCC, and the Federal Reserve issued a joint statement, completely withdrawing their 2022 and 2023 crypto risk statements. Those were the statements that warned banks away from crypto entirely, called it unsafe, called it unsound. The same statements that froze institutional crypto adoption for 2 full years. Withdrawn, erased from the regulatory record, gone. And in July 2025, the same 3 agencies issued a new joint statement on crypto asset safekeeping. This one was not a warning, this was a framework, a guidance document telling banks how to safely hold crypto for customers, how to manage the risk, how to structure custody operations. This is not agencies telling banks to stay away from crypto. This is agencies helping banks build crypto infrastructure. Now here's where it connects directly to your ISO 20022 holdings, because simultaneously, the Genius Act was signed into law on July 18, 2025, the Guiding and Establishing National Innovation for U.S. Stablecoins Act. This is the legislation that created the federal regulatory framework for payment stablecoins, and the FDIC is the primary regulator and licensor for payment stablecoin subsidiaries of FDIC-supervised institutions. Why does this matter for XRP, XLM, and HBAR? Because payment stablecoins need rails to run on. They need settlement infrastructure. They need fast, cheap, reliable networks. And XRP, XLM, and HBAR are the ISO 20022 compliant rails that banks and stablecoin issuers can actually use. Ripple already launched RULSD, their own stablecoin running on the XRP ledger. PayPal launched PYUSD on Stellar. When regulated stablecoins need to move between banks in real time, they need these networks. Then December 2025, the Federal Reserve issued a new policy statement. The most important line reads, "The Federal Reserve, quote, generally believes that issuing tokens on open, public, and decentralized networks is highly inconsistent with safe and sound banking practices," end quote. But here's the key. That line, it was from the 2023 statement, and it was removed from the 2025 version, completely deleted. The Federal Reserve officially no longer believes that banks issuing tokens on public blockchains is unsafe. That position was erased from the record. For HBAR holders specifically, this is enormous. Hedera is not a fully decentralized public blockchain like Bitcoin. It has a governing council structure with Google, IBM, and FedEx. That makes it more compatible with what regulators want. Banks can engage with Hedera infrastructure and still satisfy regulatory requirements around safety and soundness. The governing council structure is not just a technological feature, it's a regulatory advantage. Now let me explain the Treasury piece, because the FDIC does not operate in isolation. In December 2025, the Treasury Department's Financial Stability Oversight Council released its 2025 annual report. The previous year's report listed crypto as a threat to U.S. financial stability. This year, they removed crypto from the threat list entirely. Instead, they wrote that the Genius Act represents, and I am quoting again, a critical first step towards a comprehensive regulatory regime for the digital asset industry. The top financial watchdog in the United States went from crypto is a threat to crypto is a regulated industry in 12 months. And here's the detail that should make every ISO 20022 coin holder sit up straight. The Treasury report specifically noted that federal banking agencies have taken steps to clarify that banking organizations may engage in certain crypto asset activities and provide customers with crypto products. This is not a warning. This is an endorsement from the same institution that oversees the entire U.S. financial system. Let me walk you through the full timeline of what happened in 2025 so you understand the scale of this shift. March 28th, FDIC rescinds prior approval requirement. Banks are free to engage with crypto. April 24th, Federal Reserve withdraws SR 22.6 and SR 23.8, anti-crypto supervisory letters gone from official record. May 2025, joint statement withdrawing 2022 and 2023 crypto risk warnings. 3 years of stay away from crypto messaging erased. July 18th, Genius Act signed into law, federal framework for payment stablecoins. July 2025, new joint guidance on crypto asset safekeeping. Banks now have a how-to guide for holding crypto. November 2025, SWIFT migration to ISO 20022 complete. Banks must use new standard. December 2025, Federal Reserve new policy statement. Public blockchain token issuance no longer considered unsafe. December 2025, FSOC removes crypto from financial stability threat. January 2026, OCC proposes new rules allowing national trust banks to issue payment stablecoins. That's 9 major regulatory shifts in less than 12 months, all pointing in the same direction, all greenlighting bank engagement with crypto, all clearing the path for institutional money to flow into ISO 20022 infrastructure. But here's the part that should make you genuinely angry, and I mean this sincerely. All of this happened while XRP went from $3.65 to $1.54, while XLM crashed from 87 cents to 15 cents, while HBAR fell from 40 cents to 8 cents. The regulatory environment did a complete 180 reversal in favor of crypto, and the price went down. Why? Because regulatory clarity removes a ceiling, but it does not automatically create price action. The institutions that are now allowed to engage with crypto are not going to do it overnight. They're going to build infrastructure, hire compliance teams, establish custody solutions, test systems, pilot programs. This takes months, sometimes years. Regulatory approval is the start of institutional adoption, not the end result. This is the frustration you feel as a holder. The news is objectively positive, the policy shifts are historic, and the price is not reflecting it yet. But that gap between regulatory change and market price response is exactly where informed investors make money. Because once the infrastructure is built, once the compliance teams are hired, once the custody solutions are operational, the money flows. And it flows fast. Here is what to watch for in 2026. By July 2026, regulators are required to issue final implementing regulations for the Genius Act. January 2027 is the deadline to bring Genius fully into force. That means every FDIC-supervised institution that wants to issue payment stablecoins needs to have their applications in and approved before that deadline. The institutions that move first get the advantage, and they need ISO 20022 compliant rails to run those stablecoins. The Federal Reserve also announced that skinny master accounts will be available to qualifying crypto institutions by Q4 2026. Skinny master accounts give crypto companies direct access to the Federal Reserve's payment infrastructure, not through a bank intermediary, directly. When Ripple or Stellar-based payment systems can settle directly through Federal Reserve infrastructure, the speed and cost advantages of XRP and XLM become undeniable to every financial institution in the country. The DTC, that is the Depository Trust Company, which clears and settles virtually all U.S. securities transactions, received SEC approval in December 2025 to run a 3-year pilot tokenizing DTC custodied assets on supported blockchains. They plan to launch in the second half of 2026. When the institution that settles trillions in securities starts tokenizing assets on blockchains, the networks they choose become critical infrastructure. The ISO 20022 compliant networks are the most likely candidates. So let me bring this back to you. You as an XRP holder, you as an XLM holder, you as an HBAR holder. The regulatory barriers that were keeping banks out of your coins? Gone. The agencies that were warning banks away from crypto, they withdrew those warnings. The legislation that was blocking stablecoin development, the Genius Act passed and created the framework. The FSOC that listed crypto as a threat, they removed it from the list. The Federal Reserve that said public blockchains were unsafe, they deleted that position from official policy. Every single regulatory obstacle has been cleared. What remains is execution, implementation, time. The institutions are not asking if they can use these networks anymore. They are figuring out how. And the ISO 20022 coins are the only coins built specifically for that how. The price will catch up. It always does. Markets are not rational in the short term, but they are brutally accurate in the long term. And in the long term, the combination of mandatory ISO 20022 adoption and completely cleared regulatory pathways for bank engagement with crypto creates the foundation for the most sustained institutional buying cycle these coins have ever seen. You are not early and wrong. You are early and right. The timeline just takes longer than the hype cycles suggest, but the fundamental case has never been stronger, and the regulatory tailwind has never been bigger. This is not speculation. This is documented policy change at the highest levels of U.S. financial regulation. And your XRP, your XLM, your HBAR are sitting right in the path of where that capital is eventually going to flow. If this breakdown finally connected the dots between FDIC policy and your ISO 20022 bags, smash that like button right now. This is the kind of analysis that takes hours of reading regulatory documents, so you do not have to. Subscribe so you never miss when something this important drops. And drop a comment below. Tell me which ISO 20022 coin you are most confident in after watching this, XRP, XLM, or HBAR, because I want to know where the smart money in this community is sitting. And if you know an XRP or HBAR or XLM holder who is losing confidence right now, share this video with them, because they need to understand what just happened at the regulatory level before they make any decisions they will regret. The policy is clear. The path is open. The only question is whether you stay the course. I will see you in the next one. Stay informed out there.